Presidential Wealth Management. We're living in a time that will be studied long after we're gone. It's a time of uncertainty. Uncertainty brings change, and change will affect all of us. After a big rally in 2019, investors have faced two history-making events in the spring of 2020. The worldwide spread of a virus that prompted the near total shutdown of the U.S. economy was then followed by the death of a man in custody of police that prompted nationwide civil unrest at a scale that hadn't been seen in over 50 years. Early on, the markets reacted with a huge drop and the fastest change from a bull market to a bear market in history. The public endured nonstop 24/7 electronic coverage with expert analysis and forecasts that changed almost 180 degrees every day. Then came nonstop coverage of civil unrest that included daily riots, vandalism, destruction, curfews, and confrontation between protesters and authorities. While all of that was going on, the market rallied back over 40% from its pandemic-driven bear market low to a point less than 10% from its all-time high. People wondered why the markets felt the shock at the beginning, but seemed to ignore the pain, the passion, the sadness that followed. Some reminded us that investors look past daily headlines, knowing that they will pass. And that's true. Others say the market doesn't feel the pain, the passion, or the sadness because the largest traders aren't even human. The largest traders are computers programmed with algorithms that make the market appear heartless, without emotion, without caring, and without empathy. That's also true. So remember that. Make it part of every decision that has to do with the money that you've worked for and how it's invested to maintain and improve your quality of life and the lives of the ones that you love. This is the Eagle's Nest webcast. I'm Keith Weinman with Taylor Leary from Presidential Wealth Management.
Keith, fabulous introduction, and it really sets the stage for a really great conversation today. And, when we started this conversation earlier in the week and trying to figure out how does a firm like Presidential Brokerage or Presidential Wealth Management consider what's going on right now. I don't think that it's time for us to ignore the civil, social, and political unrest that we're seeing here in the United States. And I hope that this is our small way of providing light and guidance, or at least some hope for the future. So I'm looking forward to the conversation, and I recognize that it's very sensitive to what's going on today in our world. So we'll dig into some wonderful, hopefully, topics of conversation. And with that, I want to invite you, our listeners, to participate in this conversation. We recognize that there's a lot of confusion and a lot of maybe just questions that you might have. And one of the things that we always look at is how do we view the world? And oftentimes it's through the lens of finance or money. You can find out a lot about what's going on in the world if you just kind of read the Financial Times. And so with that said, I want to make sure that you are an engaged group today. And by doing that, or the way or best way to do that is through our chat box. Use this chat box to make comments, questions, and we'll do our best to just have that dialogue and open it up and make sure that that we're having an open discourse as it relates to kind of what's going on right now. And then we'll try to land the plane with how it might impact your wallet with regard to the stock market to the financial world in general. And so use the chat feature. It's going to be over here on the right hand side. Click into there. All of the comments and the questions that you send are going to be private. So nobody else in the chat room is going to be able to see them. The only people that will see them is going to be Keith and myself. And what we'll do is that we'll just call you out by your first name, so you'll keep that anonymity between us. And so we would love to hear what you have to say, what your thoughts are on what's going on today in the world with with COVID kind of not necessarily coming to an end, but at least the stay-at-home orders are starting to lift. People are going back into restaurants, and then to be hit by what happened with George Floyd in Minnesota here about 10 days ago or so, and really what's unraveled here in major cities across the United States. So would love to hear your insights. Use the chat feature to provide questions or comments, and we'll do our best to touch on them as they come up. So with that, I'm going to dive into it. I mean, markets have been unreal. Since March 23rd, we've seen about a 40% bounce. And that's both on the S&P and the Dow. The Dow was down as much as 37% year to date until that March 23rd date. And what's shocking is just how quickly it's gone down and then how quickly it's bounced back. We're just, a few points away, it seems like, until we get back to where we started the year, which is almost a shocking revelation in where we are in the markets. And then I'll kind of, just dive into, what's been going on over the last 10 days. The markets pretty much have ignored the social unrest. We've seen protests, both peaceful and not so peaceful protests, come up across the nation. And really the economic environment hasn't changed at all. What we can lean on is kind of other experiences that we've seen in history and say, okay, well, what happened during a certain event? So the most, glaring point is 1968. And at that point, the markets didn't even really bat an eye at the civil and social unrest that we saw here in the United States, with massive protests as it relates to what was going on in our environment with Vietnam and some of the other more racially driven situations. So with that, Keith, what has your reaction been to everything that's been going on over the last 10 days or so?
Well, I think it's been absolutely fascinating to watch what I talked about in the intro, was to watch the market do its thing. And it's been fascinating to realize and to see that work, to see the fact that up to 80% of the the day trading done is done via computer algorithms, and the algorithms are emotionless. And remember, one of the first and most important rules of trading, if you're a trader, is never trade on emotion. Mm-hmm. And computers can't trade on emotion because they don't have it. And that is what the market has been running on since the civil unrest began. And my concern is, and let's address this as we move forward, and let's address this in your questions via the chat box here, as Taylor said. How do you keep all of that emotion that we have been subject to 24/7 every day, every time you turn on the tube or listen to the radio or go on the internet? It's all about emotion. And to a scale that, as Taylor said, goes back to 1968. And remember, that's 52 years ago. So this has been a huge event. It's been a historic event. And I would say that, Taylor, moving forward, my number one concern with clients, and the thing that interests me the most, is keeping people from making that mistake, of trading on emotion. When and when we're being overdosed with it. 24 hours a day.
And we saw this at during March. There's a lot of headline news, and we talked about this in those early days when we first started this webinar platform in early April, is the impact of emotions on our decisions, and how those things can be, or how we need to disconnect those two things. Because right now, the race relations, the conversation is highly charged. There's the there's the left, there's the right, there's the, obviously those are the political angles, and then it's the white versus the black, all of these things that are happening, and it's like, to me, it's like this how do you get it all right, and how do you not think about the financial aspect? And in the end, I think that there's some good that can come of this, and my hope, and the other side of this is that this has been going on, and it's been going on for longer than 1968. But gosh, even in my lifetime, we've seen, the Rodney King riots. We saw the George Zimmerman stuff that happened in the late 2000s, and now we're just seeing this next thing. And so my question is when is this going to change? And then what is the ultimate outcome for us as an investor? Is this a good? Can we move to a world of equality or greater equality? And can that be a catalyst for growth in the United States, especially as it relates to our pocketbooks and the financial markets?
Yes, it can, without a doubt. But will we as a society, we as groups of individuals let it happen?
Yeah.
Yeah, and what is the new normal? And there are two ways of looking at market performance and investment performance. There's the technical, which is the graphs and the numbers, and the fundamental, the reasons, the real human reasons that businesses succeed or fail. Yeah. And how does the new normal, whatever that's going to be, play into that? It can be argued that fundamental decisions for long-term investments will be affected by that, because the new normal may make some businesses, some industries disappear and other industries appear that we haven't seen. Other industries will flourish. Technically, the numbers, I thought you'd enjoy this. I pulled this, Taylor, for you. It's a numbers thing. The S&P 500 has returned 37.7% over the last 50 trading days, okay? Over the last 50 trading days, 37.7% on the S&P 500. That makes the S&P 500, the benchmark index, that makes its best 50-day performance in history. Wow. Now, this gets better. It gets better. If you look at other large 50-day performance periods by the S&P 500, took it all the way back to 1957. Okay, that's almost before me, Taylor, and that's a long way, right? Stocks were higher 100% of the time, 6 and 12 months later, after a large and now a record 50-day performance. The average 6-month return, 10.2%. The average 1-year return, 17.3%. Now, when we give you something like this, we have to tell you that past performance doesn't indicate future returns, but still, it's worthy of mention. Will we see that again? And once again, what's going on around us, for whatever reason, whether it's technical with the computers trading, whether it's fundamental with people looking for bargains in this market, this is history. Yeah. That 50-day performance by the S&P 500 is the largest ever. And so all over the place, we're making and changing history now. How does that affect the markets? How does that affect performance? How does that affect your portfolio from a fundamental and perhaps even a technical basis?
Yeah, last week was a very big week in the markets as it relates to the technical side of things. When we look at technicals, we could get down a rabbit hole here, but looking at let's just look at the 200 and the 50-day moving average. Yeah. And last week was a big week because they broke through those the 200-day moving averages, and I mean that from both the S&P and the Dow. And that is a big psychological move, that 200-day moving average, because that really was looking at potentially being a point of resistance. And what I mean by that is that they get up the numbers, and if we were talking about algorithmic trading, that might be one of those numbers where we hit that 200-day moving average, and then it drops, and then all of a sudden becomes a resistance point to break out of. And you might look at a chart and say, if there's 3 or 4 days that get above that, then that actually creates more of a new trend in the market for from a technical perspective, and that all of a sudden that 200-day moving average could now be the floor for support in the future market. So that's certainly something that we could be looking at. But we've also never seen our economy shut down for 3 months.
Wow. Yeah, no kidding. And what was the overall outcome of that? We can't know now. We don't know now. We won't know until some time passes. It, of course, can be argued that it saved lives. It, of course, can be argued that it prompted a shift, that it prompted permanent changes in the U.S. economy moving forward. And with that, I go back to businesses that flourish, businesses that flounder. There will be both, and it won't be just businesses, it'll be industries. And very interesting, just going back to something Taylor said just a minute ago, the resistance level in technical analysis. I don't know, if you were watching just this last week or so, the last 5 trading days or so, the S&P went through 3 levels. And when an index gets through a resistance level moving upward, that resistance level often turns into a new support level. Mm-hmm. When that index starts to turn down. So, and the S&P has done that just so dramatically over the past several days.
Right.
It's a fascinating time we live in. And unanswered questions, pulled another thing that just said it so right. When stocks fell in March, investors were anticipating a devastating blow to the economy, and they were right. Today, the outlook is clouded with an almost greater degree of uncertainty. Mm-hmm. We kind of knew what we were facing on the downside in March, but we don't really know what we're facing in the new normal as we move ahead. And they outline 5 questions here. Will the virus lay down? We still don't know that. How will reopening proceed? What are all the procedures? What are the regulations? What are the safety habits that we have to incorporate into our daily lives? How quickly can a vaccine and treatment be developed? If it does come by the end of the year, that will blow away anything that's ever happened before. It will do it in half the time it's taken in the past. What might happen next fall and winter? There's a lot, you're seeing a lot of this right now. Will the civil unrest, the demonstrations result in a rise in COVID-19 months down the road? And how quickly will consumers venture back into the public marketplace? And how quickly will consumers be willing to spend? One of the things, and you talked about this, we've been doing these webcasts for quite some time. And since almost the beginning, Taylor has brought up in just about every other one the very valid point of using a time like this to increase your safety funds, mm-hmm. To just simply save some money. And that is a very important point. And people have done that. We've hit some historic savings rates when you look at the statistics. If you're looking for positives to all we've been through over the past several months, at least we're putting away some money.
Yeah. Yeah, there's been a conversation, especially as it relates to kind of the civil unrest as the impact to, you talked about the impact to the COVID-19 and all of that, and whether or not we're going to see, a resurgence. And that'll actually be really interesting. This is probably 2 to 3 weeks out, or maybe more. I don't know. I'm certainly not a virologist. But you look at the protests and you're saying, okay, well, and this is not a joke, they're obviously not practicing social distancing, which is, part of the safer at home, or some of the other practices that the governments have really wanted us to follow. And so with that, that's very fascinating. There's also been, some violence that has been, erupted around this, and unfortunately, we've seen some businesses, get looted, and that's certainly, I don't want to mar that with, what's going on, but it's certainly been an unfortunate symptom of what we've seen, and that might make some people, in certain areas, especially if demonstrations are very large in their areas, to hesitate to open in light of kind of maybe waiting for all of this stuff. They've been closed most likely for the last 3 months. Why not wait a couple more weeks so things happen or don't happen rather to their businesses? I would be curious to know what kind of the psychology is around that, and if that is something that is concerning to any business owner or whether small or large.
That's a very good point, and it's almost different for every individual case. It's different for individual businesses. It's different for individual industries. And, we can fall back and say that the growth of the United States of America has been one lesson in how to adapt, has been one long lesson in how to adapt to new things. But you can also argue that the future holds things that we can't even imagine now. We wouldn't have imagined this happening. There are some that predicted it happening, but we really probably wouldn't have imagined it. And, when we do a retirement income plan, when we do a growth plan, when we do any kind of a financial plan, one of the most important things to remember to have in that plan is you need to expect the unexpected. And you say, well, how can you do that in a financial plan if you don't know what the unexpected is? You can do it by having enough rainy day money. You can have enough in those accounts to fall back on if something happens that affects you and your family that you never could have predicted. I don't think there's any better example than this. And a lot of people are experiencing it with, there have been a lot of lost jobs. And it will take some time for those jobs to come back. Government has helped to a certain degree, and that is a factor with regard to this. But expecting the unexpected, if this was nothing else, it was a lesson for all of us in how important that is to do in any financial plan, in any investment plan that you have to protect yourself and the ones you love.
Yeah, that's really important, is to sit down and understand the philosophy around this. And I've been having some really great conversations with new clients that have come to me since the COVID started. And one of their questions is, how do we navigate, what do we do right now? And a lot of concern about how much money they should keep in cash and what they should be doing. And what we look at is the idea of, where are we going to be tomorrow? Where are we going to be in 10 years? From a financial perspective, that's actually quite a bit easier to understand than from a personal perspective. And so, Keith, roll with me here. You talked about some numbers, going back in time, those 50-day, points in time, and the returns that you saw afterward and things like that. What was the best one? It was up 17% or something like that, and then.
It was a 50-day rally, the largest 50-day rally in history. 100% of the time, stocks were higher 6 and 12 months later. The average 6-month return was 10.2. The average 1-year return was 7.3.
Okay,
17.3.
So big move. So there's 2 points that I want to make. Number one is the value of keeping kind of your head up, on the horizon. And I always use this analogy when it comes to investing. I'm a mountain biker, or I love cycling. And it's incredibly hard to stare at your feet and ride a bike straight. Okay, so what do? You have to lift up that head and look out, 15 to 25 yards to make sure you know what's going on, and keep that. Because if you're trying to stay in alignment, if you're staring at your feet, you're going to be all over. You're going to constantly be moving from left to right. And so in the markets, that's incredibly hard. What we call that is the whipsaw effect. If you're trying to catch up with the markets and buy and sell and trade and do all these crazy things and not keep your head up and look at the end of the road. And that might be 5 years from now, that might be 10 years from now. So the way that Keith and I look at, and kind of our philosophy, which is a shared philosophy, is building a framework based off of a pyramid structure with a strong foundation, with a more conservative middle, and then a more growth-oriented top. And that can vary, the amounts that you're allocating to that, whether you're an investor like me who's 35 years old, or you're an investor that's like Keith who's looking more at retirement, and the time horizon just tends to be a little bit shorter. And so with that, all of those different tranches or those different levels need to be considered. Now, the other part is, think about this, Keith. I'm going to walk this game through with you. Think about where you're going to be in 1 hour.
Okay.
Think about where you're going to be in 1 week. Tell me where you think you'll be in 1 week.
Today is Thursday. I'll be here at work looking forward to the weekend.
There you go. Okay. How about 3 months from now? How about 6 months from now? Now let's go out a year. Where are you going to be in a year? And then now, where are you going to be in 5 years? How about 15? How about 25 years? Where is Keith Weinman in 25 years? Now, what my point is that each time level that I take you out on that ledge, it gets more and more uncertain. We don't know. Yeah, I know what I'm going to be doing tomorrow pretty well. I've got my schedule in front of me. It's right in my phone. It's right on my computer, and I get dings on it. I don't really know where I'm going to be in 3, 5, 12, 25, 30 years. It's hard to say. I don't know if I'm even going to be alive. Certainly hope so. But my point is that every level out, you get more and more uncertain. The market works the exact opposite of that. Where is the market going to be tomorrow? Oh man, I have no idea, especially in today. How about 3 months from now? Are we just seeing sort of a bounce, and then are we going to, see things tail off a little bit and have the real unemployment, which is 21 million people are collecting unemployment right now. They're excited when 2 million people sign up for unemployment. These are some unbelievable numbers. How about 3 years from now? All right, we can sort of get some more sense and get a little bit more clarity there. When we go 10 years out, all right, there's some more idea. If we go 15, 20, 25 years out, it's so much more clear, all right? Because markets tend to rise over time. And so you might not necessarily have a 25-year time horizon, but if you're in your early 60s, there's a good chance that you're going to live maybe mid-80s, maybe 90s. So in that sense, as an investor, you absolutely have a 25-year time horizon. If we look at the S&P 500, going back to 1960, the worst performance in a 25-year rolling period was positive 9%. The worst. The best period was positive 17%. On a rolling average, that's an amazing return. I think everybody in this room would be happy to have a positive 9% return over a period of 25 years. So my point is that number one, we've got to think big, we've got to think long. And number two is absolutely do not forget that inside of your portfolio, you need to have growth, because growth in our vernacular, in our world, is that it's going to be more exposed to equities, and it's going to have that growth element. So we're going to see the ups and downs and fluctuations, and that we can't get distracted by the headline risks and frankly, some of the social risks that we've seen, both political and with kind of what's going on in the demonstrations and the protests. That can't derail us from making financial decisions that are going to be 15, 20 years down the road.
I've got a quote on my whiteboard behind my desk that says, ignore the noise in the short term. Think about things in the context of your long-term plan. And Taylor, yeah, that's golden. It is golden. And when you look at long-term time spans, yes, the markets definitely tend to be higher over that long term. You also have to, when you're planning long term, if you're planning into your retirement years, you have to plan for income to get you through the ups and downs. And as Taylor said, it's so important to include growth in a portfolio, but that varies in how much of the portfolio is designated for growth. And that varies probably by whether you're Taylor's age or my age. The simplest, most straightforward way to say it. Taylor can take some higher risk investments and hold them for the long term. If you're my age and you're staring down the barrel of retirement, you say, well, okay, I have to, within my portfolio, build something that will give me the income that I need to make it through the ups and downs. But I don't want to put it all in that bucket. I do still want some growth. Why? Because over those time periods that Taylor was mentioning, prices you can bet, are going to double at least every 10 years. It's more likely they're going to double in a shorter time period than that. And we're in a period of low inflation right now, and we might continue in that period of low inflation. But when the time comes and the inflation picks up again, you need to have a smile on your face and know that the growth portion of that portfolio, whether you're retired or whether you're early and working in a career and you're going to be paying for kids' college educations, you need to be glad that you did allocate some of that portfolio to growth, but in a responsible way. Very valuable observation, Taylor. Very valuable, especially with what we're going through now.
Yeah, absolutely. And, right now, I think as everybody's kind of looking towards what happens in our world and what happens within leadership. And I think that as a leader in your community, what I believe to be a leader in my community, we need to, make sure that we're talking about the challenges that our clients are seeing out there in the world, and absolutely all of that stuff has everything to do with the relationships that you build with your financial professionals in your life. And I think for us to have this platform and not talk about it, or at least touch on it, it would be a missed opportunity. So I think that having these discussions is really cool, and talking about the context of how everything kind of comes together in a financial plan, and how we can start to plan for the unexpected and understand what's going on out there, and to be kind of open with our people to say, hey, this might be something that you're reading on the headlines. Let's understand how it affects your financial situation.
Right.
When we sit down and have financial reviews, somebody might come to me and say, well, Taylor, I'm very socially aware of certain investments. How can I access investments that are in alignment with my belief system? And that term is often there's a number of different things. It's ESG or socially conscious investing, and those are some portfolios that we can put together for clients that are interested in that. So if you want, there was one that we have that's a more like religious focus. So if you're a Christian, if you're Islamic or Muslim, we have all of these different types of portfolios that you're like, hey, and what it does is we invest in companies and strategies that are conscious and aware of what they're investing in from that end. Because if you have if you don't like firearms and you're invested in a firearms company and you don't actually believe in what they're doing, then maybe that's something that you feel strongly about. We actually can create an investment strategy around the way that you believe and see the world. So it's not just like, oh, you're going to buy a mutual fund and it's just going to buy the world and all of your political or social beliefs are out the window. You can actually invest in funds in a strategy that takes that into account.
You hit on one of my hot buttons with regard to this industry, our industry, and how it treats people, clients. I love Taylor, what you just described, when someone comes to me and they tell me their likes and their dislikes, what puts a smile on their face and what keeps them up at night, what their beliefs are, how they feel about the future, all of those things. And that's golden, because that gives us a framework to work around, to build something that when that person comes back a week or two later and sees what we are proposing for them, to see them realize that we paid attention, that we listened. And we didn't do a cookie cutter portfolio for them. We paid attention and we listened. And there are no excuses for not doing that, because it's not that hard. And if you run into a company or with a company that refuses to listen, yellow light should go off, because you might be headed toward a cookie cutter.
Yeah.
Same thing works for everybody. No, it doesn't. I mean, to a certain degree, our ages make changes, our assets make changes, our family make changes, as Taylor said, our religious beliefs and our likes and dislikes. To a certain degree, some of those things, there are things that apply to groups of people. But everyone is an individual. You're an individual. You have your own dreams. You have your own challenges. You have your own bucket list things. You have your own life. You have your own, there are all of these things that makes everyone unique. And that's why I think we believe as a company, and I believe, and I know Taylor believes, that every financial plan should be tailored from the ground up individually for you. It's a very important thing. And all of this reflects back to what we started this out with. We're going through right now something that has never happened before. Since March of this year, we've been through two things that are going to go down in history. What in the world is next? And one of the things that we know is next is the new normal. Define the new normal. Yeah. I can't. We can talk about, once again, industries that will flounder and industries that will flourish. We can talk about how that will change people's lives who work in those industries. We can talk about how that will change our lives, even if we don't work in those industries. What is the new normal? And that's why this industry has to be flexible. It has to be flexible to tailor things individually to you, and it has to be flexible to keep an eye on what's going on in the world we all live in and adapt to that over time.
So one of the things that you talked about is industries that are on the rise and things that are maybe falling off, and I think it's worth talking about. And one of the next week, I believe this is going to be our topic, is we're going to talk about a breakdown of the sectors and what's performing. But I did want to just kind of tease this a little bit, is that yes, the stock market has done fantastic, but that's in a broad framework, because it's being held back in some ways, and it's launching like Tesla or SpaceX sent somebody to out of orbit last week or over the weekend, and it's like there's companies that are doing that, and then there's companies going the other way. I mean, we're looking at like financials is still down almost 19%, and that's as an industry as a whole year to date. And so we're seeing just a bit of a disconnect between what's going up and kind of what's going down, or at least maybe not what's recovering as quickly. And so I think there's a lot to this story here. And when you open up your statements and things like that, understand that you're not invested likely just in the S&P 500 or just in the Dow or what have you. And so growth rates vary, and I think that there's a deeper story to be told. So just as a matter of exercise, understand that for a well-diversified portfolio is not to be just invested in the S&P 500, but to kind of have more of a robust approach. And so your returns might not be necessarily perfectly in alignment with what's going on. They might be better or they might be worse. I was just looking at a client's portfolio who only has 3 stocks. and those things are doing extremely, extremely well. And so their performance this year has been really good. But with that, they've seen a lot of volatility. And so in that sense, we've got to keep that in mind. So Keith, let me ask you this. All right, if we're working into a world of the new normal, what is your hope with regard to the equality as it relates, and use your financial advisor hat and not no other, what is your hope for the equality in our financial markets, in our financial world?
Equality with regard to?
I would say our social and racial equality. To put you on the spot.
As how they relate to the financial market.
Yeah, I mean, I think so. If we look at the numbers, and I'll put some context to it, that our minority groups, so Black and Hispanic groups, are very underserved and underrepresented in the financial world. And we can look at the numbers, although it's kind of challenging. They do their best as far as trying to parse this out. But like when you and I open an account, we don't ask for somebody's race.
Correct.
Right? So it's incredibly difficult to understand who's opening an account and what's going on. And so believing that there is a wealth gap as it relates to our racial world, a racial and wealth gap, how do we bridge that, and what can we do as a society, not necessarily you and me, but hopefully with the help, what can we do to create a more equitable world that we live in?
You drive me back to what I believe is a very fundamental thing in how we make changes in our society and how we improve things like what you're talking about, Taylor. And that, I believe, is family. How are we raised? And as you look through different groups of our society, that varies greatly. And I'm not so much talking about beliefs, but I'm talking about what's instilled in us as children. My wife, Gail, talks about people occasionally being an old soul. We know a person right now who is in their teens who speaks and acts with the mannerisms and the wisdom of a person twice to three times that person's age. I believe that goes to upbringing. And so, Taylor, it's a little bit off subject, but I think that's something that's very important as we move forward in time in preserving our quality of life in the United States of America, is going back to the value of family and realizing the importance of how children are raised and taught. And just listening to this as I extemporaneously answer your question, I think to myself, okay, here we are faced with what I call the new normal. And we say, what's it going to be? And we say it's going to reach into our lives in ways that we can't anticipate, we can't imagine. Okay, look what it's doing to education. Look at ripple effects, remember? Things that can ripple around the world, that can ripple into different industries and different people and different formats and forms and things. What about what our children are going through right now with how their education is changing? What effects is that going to have moving forward? Because we're talking about kids in education in grade school right now, okay? What about add 50 years? How will the world be different 50 years from now because of what we're seeing right now? And I can even pull it, Taylor, we can pull it back to investments. You talked about long-term growth investments. Wow. I mean, just put those two things together. And what it says to me is with what we're doing, there are opportunities out there for us to find based on fundamental reasons that go back to your question. How do we continue to improve the society that has built in the United States of America? We got some things to fix. We sure do.
Absolutely.
And so I just circle around back to square one and saying, I think those things are fixed most effectively with how we raise our children.
Yeah. Yeah, as a father of two beautiful little girls, 2.5 and 3 months, it's something that dawns on me, and it's definitely heavy with myself to think about the way that the conversations and having some of these more difficult conversations, especially around what we're talking about in our society right now, and part of the driver of the civil unrest, which is race relations and how we interact, and what it really means in our world. Now, I will say that this is kind of a cool, my hope is you talked about it, is education and really bringing a level of education to our communities, and part of one of the reasons that we've actually existed is because of our interest in education and educating our communities, specifically around financial concerns for baby boomers. So taxes and retirement income. And one of the most important elements is Social Security. And so my hope is that we continue this trend of creating programs to educate our community about what's going on in the investment world. I think that it's going to be reliant on us to create that equality. I talked about the difference between investors that invest in the stock market. Well, it's largely driven by the white man in a lot of ways. And so one of the things that I think that's allowed us is that I was balancing a checkbook when I was in grade school. My mom was a banker. She taught me how to do that. Most kids in today's environment do not really understand the banking system. I understood that when you give your money to the bank, there's not a little box that has that money in it. I was shocked when I found out that was not the case. It was like when I found out that Santa Claus didn't exist. But I was young. Many people have to get into their 20s and maybe even their 30s to understand that when you give the bank your paycheck, there's not a little box that has that money in it. They turn around and lend that money out, and they created that's the system. And so creating that, and if you think about where we are in our world, bringing access, and there's a lot of different organizations out there that are doing this. They're trying to reach out to the communities, the underserved communities, to provide that education, because investing is extremely valuable. Because if you can invest for the long term, you make decisions for the long term and not for tomorrow or not for right now, it can make or break the way that you go about and decide for both yourself and your family. And so I think education is a really a big one that I hope to bring to the world, and maybe I don't have an initiative in place, but hopefully through the work that we've done at Presidential, we'll be able to continue that trend. And so I wanted to turn it over to you, because you actually have a really cool event coming up. Can you kind of plug that with what's going on here in mid-June?
A way that we change as we move forward. As far as technology is concerned, Taylor says to me, Keith, it's been fun to watch you be ushered into the 90s, with regard to understanding things like virtual meetings and things like that. And so one of the most popular things, and I think one of the most impactful things that we've done at Presidential Brokerage has been our approach to explaining how to avoid decisions with regard to Social Security, decisions that can cost you $500,000 in income over the rest of your life. And the most common made mistakes can result in that. And we'll show you how, so that you don't make those mistakes. What Taylor was leading up to is we're doing a virtual Social Security workshop. that we invite everybody to attend. It is going to be on the 16th and the 18th. That's a Tuesday and Thursday night at 6 p.m. Same thing both nights. You can pick the night that works for you, and you can get information to sign up for it right here on our website, presidentialwm.com. Just go to our events and you'll see it. It is going to be, once again, a virtual Social Security executive briefing to keep you from making the most common made mistakes with something that will exist into our future, something that should be a foundational, a structural part of a retirement income plan. We'll explain to you why. We'll explain to you why it will exist into our future. We'll talk about how it will exist into our future. And perhaps most importantly, how to not make the most common made errors that many people live the rest of their lives and they never know that they cost themselves a good amount of money by not getting educated on how to make those decisions in their own best interest.
Well, the beauty of a virtual Social Security event is that you can bring your own alcoholic beverages. So I will say it's going to be a BYOB. So you've got to bring your own beers or wine, but that's going to be fun. I'm very interested to hear how it turns out, and I might be a member of the crowd. So if you see somebody heckling you in the chat box, Keith, know it's probably going to be me.
Thank you, Taylor, for that advance warning and that important point that we'll be able to take your questions in the same chat box that we use here. Over here that you see. It'll be the same format, and we'll be able to take your questions as you ask them, and we'll keep it to an hour. So again, it's Tuesday night, the 16th, Thursday night, the 18th, 6 p.m. We'll do our best to keep it to an hour. We'll do our best to answer your questions, and find out about it by going to presidentialwm.com.
Well, fantastic. Well, is there any last takeaways or anything else that is kind of top of mind for you before we part ways here today?
I would say go back to sort of what we started with. That the things we talked about here today, remember them, think about them. Think about how they apply to you and your family now. Think about how they'll apply to your children and your children's children. And think about the power of decisions that you make now and how they'll affect your quality of life and those that you love, their quality of lives in the future. So that's our message to you today. We're in a very changing world. And we invite you to call us with your questions. I have a rule that I ask my clients, and that rule is no question goes unasked. If it's an unanswered question that you have, it needs to be answered. If it's a question that's prompted by something you learn, it needs to be answered. If it's a question that's prompted by something that your advisor or that we as an advisor tell you in working on an income plan for you or a growth plan for you, it needs to be answered. So come to us with your questions. It's easy to do. You can do it with a phone call. I'm Keith Weinman for Taylor Leary at Presidential Wealth Management, and our number is 303-694-1600. We look forward to talking with you.
And I want to just put this last word in there. Sorry, Keith, is I saw that there was a couple of things in the chat box that we did not touch on. Steve, I believe I have your email, and I'll drop those stocks in an email. I don't want to come off as a recommendation, because that's certainly not what I want to do. And Mark, thank you so much for your comment. I think that Keith will be doing webcast into 25 years from now. And then David, we will be launching the replay of this on our website tomorrow. It should be published tomorrow afternoon. If you would like, I will send you, or the firm will send you a link to that. And then Steve, the Social Security link, I believe it's to be determined,
It's there now.
it is there now. Okay.
Yes.
You can find it on our website under the events tab. It's presidentialwm.com, and go to the events tab, and it should be there to sign up for the virtual Social Security event. With that, Keith, thank you so much.
Broker dealer, member FINRA and SIPC.